You asked for it, and here it finally is. Live trading sessions, no gimmicks, no type of guesswork, just top-down analysis. I'm showing you step by step on how I trade and analyze the charts on a daily basis. And this is not coming from a random guy on the internet. I have been interviewed by one of the leading prop firms of our industry. I have more than 5 years of experience and I'm obsessed by the charts, and I know exactly where it's going to go next. In the last live trading session, people who tuned in walked away with real profits. Join my Discord in the description, because this is your chance to finally learn how the pros analyze the charts. So on the weekly chart, we had the relative equal highs already being taken out. This period of time was really great to trade because it was, after I took out the relative equal lows right in here, it was obvious where it's going to go next, and that is the relative equal highs because they are so strong. Combining that with the gap that needs to be filled with a body closure, because why did I draw it from this way? The entire gap for that matter is this, but I draw it from here, it still didn't get fully body closed, here still didn't get fully body closed, and then in here it still didn't get full body closed, so we are still waiting for the upside. Okay, we have gone higher, we took it out, we took out the relative equal highs, that move is over. So the next thing that we will be looking at, we are still staying in that range after we have taken out the relative equal highs, but we're looking out for this FEG now. This would have been the next target to look out for, because we already had downwards movement. And again, we're just trading in that range, going from relative equal high to relative equal low. And that also happens internally within the weekly candle, but we'll go over that in just a bit. That is basically the logic behind this entire move. So that was the reasoning behind why we took out the relative equal lows first. We've gone up. This is the next target. After we've taken out the relative equal highs, what's the next target? The FEG, because we know weekly FEGs, or in general FEGs as a whole, usually always get traded back into. And fast forward, now we're at the present. So and also after this candle closed, right, even though this is in an FEG, this is still a very high probability that it will go to the previous week low, just because of the logic from my daily bias video. It applies to the weekly as well, that we are just so close to it, we might as well take out the previous week low. Now skipping forward, there was some gibberish going on here and there, and this week is the current one. Now what have we just talked about? Keep this logic in mind. I'll remove it so the chart doesn't get messy too much. What have we just talked about? Gaps, actual price gaps, not FEGs, not fair value gaps. Actual gaps get traded into with a body closer. So this is the case for this little one, but also this one, which is a little bit bigger. So although we are going to the downside, and this is just the weekly, right? We're only talking about the weekly chart because there's so much to learn just from this picture alone, right? I don't even have to move out in the chart. We can just have a lot of information just by looking at this little bit of price action. We have 1, 2, 3, 4 weekly candles to the downside, and creating a fifth one. This will most likely not reverse by Thursday, and Friday, so basically today and tomorrow. So this will also be a down close candle, suggesting that next week will most likely be bullish, especially if we are closing this weekly candle somewhere in the middle. Then this will definitely go for this gap and this gap. I'm going to look at the chat real quick. Don't we call this gap imbalance? I mean, there's so many different ways to call this. I just call it a actual price action gap, like a literal gap in the price. At the end of the day, it doesn't really matter what we call it. What matters, how do we draw a conclusion from it, and how do we trade it, and more importantly, how do we make money out of it. So this was for the weekly. Going on to the daily, we apply the same logic again. So I am going to remove the weekly charts for now, the weekly gaps, so the chart doesn't get too messy. But we apply the same logic over and over again. What do we have here? We have another gap. Now it appears like this is the only thing that I'm trading. That's not the case. But we just have a lot of gaps recently, and we can basically trade off of that. Now going on to the 4-hour chart, we had those relative equal highs being taken out, and we had a bunch of sell-side liquidity down here, relative equal lows. This is the reason why we have gone lower. Now, I personally thought that we will first go over this high once again before going lower, but it didn't do that, and that is totally fine. However, the momentum to the upside is still there, so don't get tricked just because we're going lower currently. There's still a lot of unfinished business that we're looking at. Basically, we have this entire hourly FAG. Now, of course, this is the hourly FAG, and we have already moved quite a bit of time. I'm not just talking price-wise, moved away from it, but just really time-wise. Because if it's already that much, you would suggest to go on the 4-hour. But in this case, I like to have it on the 1-hour, because we can draw a conclusion from having here even more relative equal highs, right? So we are still quite far away from where we actually are, but we are not trading all the way up into those. We're taking a very easy approach and very easy target for today. So this is the main target that we are looking out for, the absolute max target that we want to trade in. Now the next thing that I want to talk about is, let me check this real quick. Okay. Next thing that I want to talk about on the hourly chart, we have those relative equal highs, and this is the main idea and bias for today, right? This is the main idea why we are going to literally just take a long right now and into the relative equal highs, suggesting 10 pips. Ideally, you only want to go for that high, but it is okay to go for the entire relative equal highs. And your stop loss, let me check it real quick. Your stop losses can be about 50 pips because we don't really have something specific to look at right now. The most thing that we could look at would be this order block, but I wouldn't rely on that, so we would just go for the regular about 50 pips. It could be, if anything, between 45 and 55, but ideally just 50 pips. And this is literally an easy day, and it will take profit. Maybe not today, maybe tomorrow, but very easy trade. Yeah. Take a screenshot of this and make sure that you remember this chart, because this will take profit. Now, of course, I'm not right 100% of the time, but I'm right most of the time. That's why I'm so confident that this will take profit. Why is SL so big? Yeah, this is so the traditional trading style, right? What is it? Or basically your trading style, you're having a 3-4-1 risk to reward, right? But that also means that your win rate is not quite high, because don't even try to tell that doesn't exist with 1-2-3 risk to reward and having an 80% win rate. It doesn't exist, literally. So the risk to reward is 1-4-3, and the win rate, if you are profitable, is something around maybe 30%, something around that. So your win rate is extremely low, but your risk reward is high, so that's why it's profitable. But this is the exact opposite, right? So the risk reward is low. So basically it's a 0.2, or let's just say it's 0.5 sometimes, right? 1-4 0.25. But the win rate is just so high that it has edge again, right? Because the win rate is above 90%. So this will hit a profit, and therefore it is essentially the same as this one. So this entire stuff is the same as this one, but just the opposite way. But as long as it has edge, as long as the win rate and the risk reward is mathematically correct, and you have an edge into the market, you have an actual way to pull out markets because you have found an inefficiency, then you're profitable, right? So basically I'm winning every single day, and losses occur very rarely, right? I go on extreme winning streaks. I'm winning for multiple months in a row until eventually I just get that big loss. But that is no problem, because you always just risk maximum 1% on each trade, and that is it. Now for this trade, I don't recommend doing 1%, because usually if it's a great, like literally perfect trade, you do 1%. But on this one, I recommend 0.75%. That's just my way of risk management, to never overexpose myself. So now, do we have something more? So we have this entire framework, right? We are looking at this not just from a perspective of, um, well, we are going higher, we are going lower. No, we're actually building an entire framework off of this. So we have gone onto the weekly, daily, onto the 4, 1 hour, and then we are building more and more reasons why we will go higher. So it's not just one thing that we have the relative equal highs right in here, aligning up very well, but it's multiple things. Another thing is also that the order flow is turning out to be bullish currently. So another thing for us to go to the upside. So it's basically a safe SL, somebody asked. I don't know what you consider as safe SL, but if you mean it in that way, that just having a lot of more room to breathe, then yeah, because it is a way to, you don't have to be right for the entire market, right? So I explained this a lot of in the videos as well, but as you can see, so what do we have in the traditional trading world, right? We have this, we have this. This is representing the chart that most people traded, like, right? You have this chart. And the thing here is, you have to focus on two things. Time, right? This is representing the time, because the longer it goes to the right, the more time has passed. And on the upscale, you have the price. So the X, I think this is the X, this is the Y, or maybe the opposite way around. But we have to focus on price and time. But in this way of trading, you don't have to focus on time. Why? Because if you say this is an uptrend, if you just miss the timing by a little bit, even though you're right on the direction, right? Let's just make a very extreme example. You're right on the direction. You knew that this will go to this specific level, right? Let's just imagine this is your key level that you're looking out for. You knew that it will go there, but you got stopped out beforehand because you have to time the market very well. Now, what do we do in low risk reward? We say, fuck the timing, right? I'll just enter whenever I think it is a good time to enter, because the stop loss has a lot of room to play into. Of course, we don't completely ignore the time, right? So we're not trying to long at the top. We're not completely ignoring it, but we're giving ourselves more room. And that is the reason why, even though we are going into a drawdown, we are used to that. That is no problem for us. This phase is completely normal, because we know that we will get back into the take profit, simply because we are just focusing on this aspect alone. We are just focusing on where price is going to go, right? This is the problem with most traders, what they're unprofitable. They focus on trying to predict the exact timing. So what they do is literally they take out their long or sell tool and they try to long it all the way in here with a minimum stop loss, and then there's the problem. So where we left off is, they try to predict the price as close as fucking possible, and on paper that sounds great, right? That sounds like, okay, I'm getting 100 risk to reward. But come on guys, this doesn't work. This does not work factual wise most of the time for most traders. I'm not saying that this doesn't work for anybody. There are surely traders out there who do this kind of stuff, but usually the risk to reward is way lower. It's not a 10xr or something like that. It is maybe a 1.5, maybe a 2 at max, or maybe a 3, but anything higher than that is most likely just bullshit. But this is a different topic. So basically the point is that we're not trying to predict the time, we're just trying to predict the price aspect of trading. That is it. And we only focus on that. And again, that doesn't mean that we completely ignore it. We don't try to long in here. Well, we are okay longing in here, or somewhere in between. That is totally okay to us. So that is explaining the entire way of trading. And yeah, it's a very untraditional way, and it's a special way. For anybody just joining in for the results, it's no problem, but just make sure to join the upcoming live trading sessions. As you can see on the chart, what we predicted earlier is exactly what happened, because this way of trading works, and everybody who denies that basically denies the facts of the market. You could have literally joined the live trading session, made easy profits out of it just by following the exact signal that I've given to you right now. And the best thing about this is I not only included the profits, I literally included the entire analysis. so you could have also learned from it. Make sure to like the video, also subscribe to the channel, and turn on the notification bell to not miss any future videos. See you guys next one.